Good morning, traders. It is Monday, November the 11th. Taking a look at the charts, we've got the SP 500 daily chart. You can see here our cycle analysis shows that we've got an extended cycle to the upside. Obviously, when a cycle breaks and a trend breaks and continues to move in a direction, the cycle that was supposed to top out will extend and continue to push higher. And this is one of the reasons why you don't want to try to pick market tops, because the market can continue to extend and break cycle after cycle. The trend is more likely to stay intact and continue than it is to reverse. And so we're waiting for the market to eventually roll over for us to look for an inverse type of play. The last time we got short over here and we had a short signal over here, and we'd be waiting for something to unfold for the market momentum to start to roll over and give one of those signals. Until then, got to be aware we're still marching up this 5-day moving average. Yeah, markets are down about 0.5% this morning, but overall there are a series of bull flags where you rally up, consolidate, rally, consolidate. It's just a series of these little bull flags. We rallied up last week, late last week. We're consolidating, and we're still trading sideways at this point today, but we could continue to grind our way higher and eventually try to put in some type of top. We'll need to see the market roll over and start to lose momentum. Now, overall, if we take a look over at, let's move over to bonds real quick. Bonds starting to show a little bit of life this morning. They're more or less oversold, having a bit of a bounce. Again, we've still got cycles taking their time to try and put in a bottom here for the bond chart here. Overall, it was trying to hold support here, and it broke down, continued to move down with what looks to be a big ABC correction, which means we get an A, B, C correction. It's a break of this low here that should flush the market out. We see it go down, put in some type of bottom over here, and then eventually we should start to see that move higher. But money continued to flow out of the safe havens yesterday, or not yesterday, last week, and we'll see if they can get some traction this week. Looking over at gold, we were long gold, the UGLD. We ended up closing out half a position on Thursday and closed out the rest of the close on Friday, hoping that we were going to find support at this pivot low right over here. Just zoom in a little bit here. We're looking for support where it dipped down, tagged that support level, started to bounce. We're hoping we're going to get a knee-jerk reaction back up, but the news and the selling just continued to put some pressure on it. Ended up closing down below our stop, and we got closed out there. Ended up being about a 4.5% loss on our portfolio, on our entire portfolio, which is a pretty decent drawdown. But again, it really negates more or less our previous trade in natural gas. So it's not, it was a bigger trade loss than I wanted. Typically, when we get into a trade, we start to see the market move in our direction to some extent, and our initial stop is a trailing stop. So I initially start to move our stop up. But really, when we got in, the market rolled over with some news and then continued to roll over, and our stop never got to tighten up. Anyway, we took a loss on that one. Overall, it's not the end of the world. We're just going to continue to keep on trading here. Our natural gas trade does cover most of that, or all of the loss that we took in UGLD. So 1 week we get a nice trade, the next week we give it all back. But that's the way the market goes. Sometimes you can't just keep pulling out of the market. Sometimes it'll take it right back from us, and that's just the way it is. Looking at the cycle here, gold broke below the support level. It's breaking a short-term cycle, which is extending a downward bias for this week. So we could continue to see it flutter and struggle and potentially move down. We are out of gold, and we'll see if it can get some type of traction and build some type of basing formation to move higher here. Overall, we're just going to let it do its thing until we get a new type of signal in the market. It was setting up a nice base. We saw gold miners actually break to new highs, or not to new highs, but break previous highs. If we go to GDX, GDX was actually giving the whole sector a buy signal. It moved up to break these previous highs, two previous highs, and we were looking for some follow-through buying, but instead we had some news, and the bonds really got sold off. The rates went up, and we've seen the metal sector pull back, but the gold miners are actually still holding up really well here at this point. They are trading. They made a higher high. They're still holding these lows. It's still holding this low over here. So at this point, the miners are still holding up, and we could continue to see this potentially chop out a larger base. Maybe it just needs a lot more time here to work through here, but overall, the miners are still holding up and still on a buy signal at this point. I updated the trend chart in the members area. You can see we are into an oversold territory for miners. They should find support, And typically, if miners are breaking out and leading, we see gold follow suit. But again, last week we had a couple days of news that really pulled down on the precious metal sector, and gold got hit kind of the hardest there, breaking some previous lows. Looking over at, let's go to energies real quick. Natural gas is unwinding here today. It's down 4.5%, moving down to this previous level, almost to the point where we locked into our first target here. We took 14% off somewhere down over here on this rally. We took some off up here at about a 30%, 38% gain, and now it's pulling back. And today, depending on how it starts to sell off, if it moves down below our first target level, then we will close out the balance of this position here for, it'll be about a 14% gain on that last quarter of that position, and we'll move on. Overall, the cycle is pointing to the downside, but you got to remember cycles, they can change. The key is to follow the trend. At this point, we've got a nice move to the upside. We've got a critical support line through here. This green line is also a very long-term support level. And so if the market can hold here, we could very easily see natural gas continue to move up going further. But it really needs to find some traction here today or this week for it to recover, or we're going to be closing it out and locking in the rest of that gain there. Looking over at crude oil, down 0.9%. It's been flirting with this blue horizontal resistance line, one day up, next day down. It's all over the place. Overall, it's kind of drifting up here in this what I call is a broken limb, where more or less you've got a strong move to the downside, and then it's just kind of slowly drifting its way higher. It's channeling its way higher, but overall, it's just getting into the upper end of this range here, where we've got a cluster through here, we've got this breakout cluster through here. Really, this whole area is going to act as a pretty solid support zone. Even if it gets up into here, it could start to struggle and roll back over. Not a whole lot of insight. In the short term here, we've got a rally, a pullback, a rally, a pullback, a rally, and we could see it continue to pull back. But the short-term bias is to the upside. So naturally, crude is going to want to continue to move higher. If it can break this resistance level, it's going to pop back up to the upper end of this range, probably around 58, 58 and a quarter, and can continue to slowly work its way higher from there. Last but not least, take a quick look. This is a UUP, which mimics more or less the US dollar index. Last week was a really strong week for the dollar, which also probably put some pressure on metals in general. Rising dollar tends to be a weakening signal for metals. And of course, we had 1, 2, 3, 4, 5. We had 5 big up days in the dollar. We had bearish news for gold, and those things all just really helped really unwind gold and go against us on that play. But overall, the dollar continues to hold up. It is still seen as a safe haven play, getting back most of the gains that it lost over here. It lost a bunch, it's recovered a bunch of that, and we'll continue to see this, see if we see gold and the dollar become the safe haven play again going forward. Anyways, that's it for now. Talk to you in a bit.